96% of venture dollars are controlled by white men and women. I don't even want to think about what percentage of money is controlled by women of color. Starting VC Unleashed really came through my personal experience of recruiting for venture, where you really only talk to people who look the same. I spoke to so many men, mostly white, and my entire 1.5 years of venture recruiting, I spoke to one Indian woman, which is how I identify. And I could tell immediately she wanted to take a chance on me. And I remember walking away from that conversation, like almost feeling guilty. Like, should it have been that easy? Like, should it have felt so nice? And then I was like, well, I wonder if this is the process which a lot of white men experience, where they just show up and like, even you're not a good fit, but the person across the table just wants to give you a shot.
Hi everyone, welcome back to Brydge Club. This is your host Ruffin. Today I'm chatting with Tanvi Lal, an investor at Intuit Ventures focused on Series A through C fintech, commerce, and enabling tech. She is also the founder of VC Unleashed, a nonprofit dedicated to increasing racial representation within VC investors. Prior to her role in venture, Tanvi earned her MBA at Berkeley and built a career in consulting with Deloitte. Tanvi, so excited to have you to the show today.
Yes, thanks so much for having me, Ruffin. Excited to be on, and am a proud Brydge Club member. So thank you for the work you're doing to empower women in entrepreneurship, venture, and beyond.
Amazing. Well, right back at you. To start it off, can you share a little bit about your journey into venture capital and how you made the jump from consulting to VC?
So as you mentioned, I started my career right out of undergrad as a consultant at Deloitte. Really enjoyed my time there, but think just reached a point where I didn't want the job that, my senior consultant and my partners had. And that was what brought me to business school. And honestly, I didn't even know what venture was before business school. I had never thought about startups. I had never thought about investing as a career path. But when I came out to Berkeley, in the epicenter of Silicon Valley and San Francisco from New York, I really just got a crash course in what a startup is and had a chance to intern with a seed stage fintech at the time called Sequin that is building financial products specifically for women. And it was when I was helping the founder with her seed stage pitch deck that I started thinking, hey, this is really, really fun. I love the thinking and the thought process that goes into thinking through an idea, analyzing the market, and beating out your competition to create the best possible product. So started thinking about what are roles where I could do this continuously across, different industries, different spaces in fintech. And that's how I landed on venture. So I was really fortunate to, work with a couple of funds before eventually finding my way to Intuit Ventures.
Brenda, the founder of Sequin, was actually one of our very first guests on the show.
Amazing.
It's so cool to see this come very full circle. Yeah. So when you applied to business school, first of all, I also didn't really know that venture capital was a career path that you could even pursue until I was at UCLA for my MBA. So totally resonate with that. What did you what was your plan going into school? Did you have a high level goal of I want to break into startups or VC, or were you really just open to exploring lots of different paths?
Well, it's interesting you say you also didn't realize that venture was a career path. I'm sometimes not sure if it's just such a small niche career or if it really is something that maybe just doesn't even feel super accessible to women as something to aspire to. And it's probably a combination of both. And it's funny, I think people just don't even think to talk to you about it. They don't think it's an option for you or what have you. So when I came to business school, I had no idea what to do. And it's funny because I tell people going into business school to not do that. You should, in fact, think and have a process in place about a few areas you want to explore, because then you can use your MBA very intentionally. So I came in with this complete blank slate of, I just don't know what else is out there. I spent so long focusing on my job and doing well in my role. I didn't bother to really explore or peek my head out to see what else was going on. I had this really, really vague idea when I came to school that I had two vague ideas. One was I wanted to explore working with a smaller company, which is how I ended up at Sequin, because naturally, after working at a large multinational corporation, the next step is to work at a 3-person startup. But it was such a great learning experience. And the second piece I wanted to explore was, did I want to do some type of mission-driven job? While I was at Deloitte, I did a lot of pro bono consulting with nonprofits, and had so much fun doing that. So I was interested in exploring, could I make a career out of this where this is my actual job? And that's a conversation for a separate time. I think I learned through the MBA that I wanted to keep my job and impact work kind of separate and do, two unique items, which is where VC Unleashed comes in, which of course I'll get into as well.
I think we talked about this way back when we first met, but I went from Deloitte to a Series A startup, which is like a
Oh,
more
nice.
gradual jump because we had like 75 employees.
Yeah.
But what were some of like the big differences you saw from going from consulting to early stage startup, and like maybe what did you like or dislike about each?
So you probably felt this in a much more prevalent way than I did, but I think the biggest difference is just the lack of structure that's there. Consultants, and I particularly worked on large tech implementations. So we had, 7 to 8 different work streams. We had over 100 people on the project. So having clear processes in place, having clear collaboration paths was really, really important to be successful. And you go from all that structure, all that clarity to, hey, what's the product going to be? Or actually, we're a team of three. You just chip in and you figure it out whenever. So I think that lack of structure was a big change. And it was really interesting because I think I learned both how helpful it can be to have structure and how limiting it can be to have structure. So this, working at Sequin, and I'm really grateful to the team for taking me in and like pushing me, I think really got me to hustle and to figure out how to just make it happen and really challenge myself of, do I need this structure or is it just stuff that I'm used to in general? And I think it also helped me get clarity on how do I create structure and how do I balance this concept of building what has never been with what is practical and what are like the tangible steps to get there. I'm not sure if you felt the same way, but I think I tend to get bogged down in the process to get to the vision rather than really sitting with the vision and then thinking about the right way to get there. So working at a startup was a great way to push myself and also just like grow as a professional, as a person.
Yeah. I'm sure also like helpful perspective to have now that you're like in the investing seat. So tell us a little bit more about like what you did during the MBA to get in that full-time investor role, because I know from even my experience like there were tons of classmates in my class who wanted to go full-time VC after the MBA but still don't end up in a seat or get a foot in the door. So curious like how you navigated that and any advice you would share for others.
Oh, I mean, how much time do you have, Ruffin? I can talk all day on this. So I think the most important thing for me was just to get some experience. So through the MBA, managed to land with a couple of funds to intern during the summer and part time. So I worked with a fund called Westbound Equity, or that's currently called Westbound Equity, that does early stage checks into Black and Latinx founders, and then also worked with Cowboy Ventures in their fintech with their fintech principal Jillian, who's actually now a partner. So I think a lot actually goes into actually just landing the internship, right? You still have to prove yourself to be the right candidate for that. And when I think about my path to landing in an investing role, it really is, I mean, this cliche advice of doing the job before you have the job, but I want to break it down a little bit because it's actually not a very clear term. And we actually know this because, again, I'll talk about VC Unleashed, but we did a study on like what holds people of color and women and just anyone back from breaking into venture. And that was actually a key thing of like, people don't understand what it means to do the job before you have the job. So I kind of, when I thought about my recruiting process, I broke it down. Like, what are the main areas of the investor's job? You're sourcing, you're doing diligence, you're creating like market maps and theses, and then you're working with your portfolio companies to actually make them successful. And it's actually kind of a tough bar to hold yourself to, doing the job before you have the job, because a lot of the job is access and privilege and like the ways you can push yourself into the best deals and get to know the founders. So I really do think in your recruiting process and my recruiting process, the focus was just, okay, like how can I hustle and like get my foot in the door without all of that? And that's how I really approached it. So in addition to internships with the funds, I was creating my own investment theses. I started a Medium blog. You can check it out. I wrote a bunch of Tanvi's takes where I talked about my theses in the fintech space. And it's actually a nice way to also get your foot in the door, but to talk to other investors and to talk to other founders. Anyone is pumped when you reach out and you're like, hey, can I write a blog post about you? And then that gives you an excuse to talk to them, or a podcast, So I think creating those blog posts, having them be public, sharing them out as work products, and getting feedback and inbound from founders and other investors who wanted to connect was really, really impactful. Doing the job before having the job means an internship. It means doing all of that. And it means constantly doing all of that. Like your goal, and when I thought about it, my goal was to show up day one with a fund and be ready to like hit the ground running and do that. But there's just like time and like years of just like work it takes to get there. So it really is just a long process, but it's worth it if that's what you want, you know?
To that point, can you speak a little bit more about obviously what inspired you to start VC Unleashed? Can you share a little bit around like the stats on the lack of diversity and venture capital, and then the efforts that you and your team are doing to improve the lack of diversity in VC?
Yeah. So the stat I always like to start with is it's that 96% of venture dollars are controlled by white men and women. And maybe I think it's 3 or 4% is controlled by white women. So like the majority really is controlled by white men. And I like that stat better than percentage of investors or like percentage of GPs, because a lot of emerging funds where you have women and people of color leading are smaller funds. You may have, a lot of women and you look holistically across the board, but like who is writing the checks and like who is in control of the money? Those are important things to think about. So that's the stat I always like to talk about. So you break that down, 4% is controlled by people of color, 4% of venture dollars. Like, I don't even want to think about what percentage of money is controlled by women of color, and it's
Insane.
still a very, very small percentage that's controlled by even white women. So I always start there. And then, the funding that goes to founders of color, women founders, is absolutely abysmal. I want to say it's like 2%, 2 to 3% for women, like 1 to 2% for Latinx, Black founders. And again, when you look at stats by women of color, it gets really, really rough. So I think there's just such a clear problem statement that exists. And if you think about the way the demographics of the United States are shifting, there are significantly more than 2% of women. There are significantly more than 1 or 2% of Latinx, Black folks in the community, in the country. And when we as venture capital think of ourselves as the forefront of innovation, where the country moves forward, how we build better products, et cetera, it really feels disingenuous to say we can do that when we don't represent what the country looks like. So you start from like a data perspective, you see a clear issue. And I think starting VC Unleashed really came through my personal experience of recruiting for venture, where you really only talk to people who look the same. I spoke to so many men, mostly white, and my entire 1.5 years of venture recruiting, I spoke to one Indian woman, which is how I identify. And I could tell immediately she wanted to take a chance on me. It was for an AI fund. I knew I was not a good fit, but I was really, really touched that she really wanted to. She saw herself in me. And I remember walking away from that conversation, like almost feeling guilty. I was like, should it have been that easy? Like, should it have felt so nice? And then I was like, well, I wonder if this is the process which a lot of white men experience, where they just show up and like, even you're not a good fit, but the person across the table just wants to give you a shot. And so much of venture is unstructured, and a lot of it is network driven. You go off, your gut, whatever you define that as. And so when you don't have diversity in people sitting across the table from you, it's really hard to get that type of stewardship or championing. Yes, it's hard to get someone to champion you. At the time when I was trying to break into venture, there was a community called VC Unleashed that was floating around as a WhatsApp chat. And that chat was started by my good friend and co-founder, Michelle Donsinghani, who was at Columbia Business School at the time. So really, that's where VC Unleashed was born. It is a grassroots kind of WhatsApp chat, and joined Michelle to scale the community formally. And here we are. I'm happy to get into who we are and what we do as well.
Would love that.
Awesome. So, VC Unleashed, we are a nonprofit focused on increasing racial representation amongst VC investors. It's a bit of a mouthful when I say it like that, but it's really important to have specificity, I think, when you're addressing diversity in this space. So, when we think about the venture landscape, there are LPs who fund the VC funds, and you have folks in the LP position who need to care about diversity. You have investors who need to care about diversity, and then that trickles into having diverse founders you can invest in. And then if you take that one step further, founders need to make sure they're hiring diverse talent in their first few employees. Think about a huge exit like Facebook or Slack or what have you. It's not just the founders and the investors who make it big. It's like the first 100, 200 employees who also generate life-changing wealth. So really, I think about diversity in this cyclical spectrum. And I have to really credit the team at Westbound Equity who helped me see it like that. So when Michelle and I were thinking about what makes sense for VC Unleashed, we realized there weren't a lot of resources and time being spent on the pipeline for venture investors. There's support from orgs like Black VC, VC Familia, Somos VC, Allraise that focus on current investors, focus on emerging fund managers. But if we want to get more people of color and women into investor seats, there needs to be more support for that funnel. So that's where VC Unleashed plays. We have a Slack community of close to 1,000 people now, which is crazy. And we do a number of community building and networking events, including a quarterly education series. We have 4 chapters across the country who do in-person community building activities. We have an annual conference called Shift VC that we just hosted about a month ago in San Francisco, which is a full day of programming kind of tailored towards folks who want to break into venture, women, and people of color. And then this year, we also launched the Road to Venture, which is a survey initiative to kind of just put details and data into the process of breaking into venture. So where do people struggle the most? What resources do folks need? And how does that look different based on gender or based on race? So it's kind of a summary of what we do. And it's been an awesome 3 years building the community.
What were some of the overall findings from the survey?
I think the biggest finding was that breaking into venture just looks different based on your race. So respondents kind of ranked which activities were helping them be successful in their venture recruiting process. So things like understanding the interview process, like sharing offline resources, cold outreach, like social media, and different races just had different things that they gravitated towards. So it was interesting to see that, number one, the process just looks different. Some of the other really key takeaways were internship comp and just venture comp in general. It's very variable, and that is a huge kind of detractor for people pursuing venture as a career path. 68% of respondents, they noted that VC internship comp is or could be a limiting factor. So over 2/3 of folks are concerned about compensation.
Did you collect any data on what the VC typical comp is for internships?
Oh, we did not, but that would be a fantastic follow-up survey, I think.
Because I think a lot of opportunities are straight up unpaid. And if anything, very little pay.
Yeah, there are a ton of unpaid internships. And it's interesting. There's this mentality that you have to do your time to get in, and you should be lucky just to have an internship in general. And it's a dangerous line. I think most venture funds can afford to pay their interns minimum wage, maybe a little bit more than that. And I think if you think about being able to provide an opportunity for someone who's low income or someone who has to pay their own rent when they're a student, et cetera, they really cannot take on unpaid internships. So creating an opportunity for everyone to just be able to do it is a great first step. And from there, we can get into how do you create more equitable hiring practices and all of that.
Yeah. Beyond everything you guys are doing at VC Unleashed, are there any other programs out there, maybe fellowships that are helping more people of color get into VC that you want to shout out and make sure everyone is aware of?
Yes. So I want to give a huge shout out to HBCU VC. They provide opportunities for people of color to have fellowships with funds. They do a ton of great work. So my internship with Westbound Equity was through HBCU VC, and I tell Hadia, their CEO, all the time that I would not have made it into venture without that fellowship and without that experience. So huge shout out to them. Also have to give a huge shout out to Venture Forward, which is a nonprofit, the nonprofit arm of the NVCA. Miriam and the team, we work closely together. They have an awesome program called Venture University, which I believe applications are open for, if I'm not wrong, but check them out and definitely apply whenever they're open. It's a great crash course on what is venture, and they do a ton of great work.
I will try and link all of those resources in the show notes. I will do my best. And then, okay, so now that you are in a venture role, can you share? I'd love to just move to talking a little bit around what you're now investing at Intuit Ventures. So, can you tell us a little bit more about your fund thesis and maybe an example of a company you recently invested in?
Yeah, so we are the venture arm for Intuit, as you might gather from our name. And we do mid to growth stage companies, so Series A to C, focused in areas that are strategically relevant to Intuit. And we actually have a pretty large array of products. So, of course, we have QuickBooks, accounting, and TurboTax, tax related. Those are the two main things folks know us for, in addition to Credit Karma, which is personal finance, and MailChimp, which is an email and SMS marketing platform. People often forget we bought MailChimp, which cracks me up because it was a huge acquisition. We also have a pretty robust payroll business. So if we think about all of those things, we spend time in fintech, commerce. I actually lead our commerce investments, HCM benefits, as well as enabling technologies, which are things like AI or SMB tech, because that's a big customer base of ours. So that's how we invest. We are a corporate venture fund. So if you spent any time with CVCs, you'll know we're all little special snowflakes in terms of how we invest. So Intuit's pretty 50-50 down the middle. We invest for strategic learnings as well as financial returns. Small but mighty team of four, and it's been an awesome year and a half so far.
So the funds that you entered at, were they earlier stage or were they also like the Series A through C?
Yeah, they were all earlier stage funds. So it has been unique or just like different to work at a slightly later stage fund. And it's funny, I actually really enjoy the deals like Series A, B, C. I enjoy these deals so much more than I did early stage. And it was interesting. And I think in my recruiting process, no one really thought I would be a good fit for later stage deals because I didn't have a really strong financial background. But kind of just goes to show you, you should gun for the role you think you're going to enjoy the most because I am enjoying these deals a lot more.
Yeah, that was actually one question I was going to have was I feel like most people will say you need some kind of more like traditional banking or finance background to be kind of investing at that stage. I guess maybe you don't, or maybe you've just learned on the job. And then also what has been like kind of the main differences from the pre-seed seed versus Series A to C investing?
Great question. So I do think you need a general comfort with financial statements and with basic modeling, honestly, to do any type of venture. At, let's say, a Series B company, you still maybe have 2 to 4 years of financial data and performance history. And really, the first couple of years aren't even indicative of the future trajectory of the company because they're so small and they're growing. It's really easy to 5x your business in your first year. It's really hard to continue doing that. So I think financial modeling at the stages I work at is actually it's not that hard. Like it's not that different from things I've seen and done in business school and in earlier stage investing. And so I think there's this overemphasis on financial background and modeling and banking that feels a little unfounded. I think to the extent a banker brings industry experience, they bring connectivity, they bring maybe this like deal knowledge, which I can get into why it's important. I think those things are really relevant. But I think financial modeling can easily be learned on the job. And the most important part of any financial model or returns analysis in venture are the assumptions you make. So the qualitative factors, the art of it is actually the hard part, in my opinion. So I think it's important to demonstrate technical skills because no one's going to have the time to really teach you how to do those things. And maybe other types of analysis like a cohort analysis, unit economics calculations, those types of things are pretty important and relevant. But in terms of modeling and valuation, I think it's stuff you learn on the job. And every fund even approaches it differently. So you might have an approach from one fund and you go to your next fund and they approach their valuation or their modeling completely different, which kind of just shows you how much art there is.
Yeah.
And then you'd asked about stage differences. I can get into that as
Yeah.
well.
What were like the main differences you saw from the pre-seed seed versus Series A to C?
Yeah. So pre-seed, I've learned it's just so hard. There's no product. You typically are investing in just a vision and the caliber of the team and the belief you have that they're going to go far. And I think to an extent you're doing that with seed too, because you'll only have small indications of traction. Often it's just a proof of concept or a few early paying customers. And so I think at pre-seed and seed, you are investing in the potential of the business and you're investing in a team that you think is going to find product market fit. By the time they hit Series A, there should be clear signs they are hitting or starting to hit product market fit. On Series A, typically, like, you could even still call that early stage. I think by the time you get to B, you need to have a clearly articulated product market fit, like value prop. There needs to be some idea of like sales and go to market. Typically, even Series B companies are trying to figure out what's the right go to market and sales team hiring. So it becomes a lot more about your growth as a company, your repeatable process to continue landing customers, and just how are you going to keep scaling and hit profitability. So that's what you're evaluating at a Series B, and even more so at a Series C. So the analysis becomes different as well. You are underwriting far more on where the product's going to go. If a Series B company expects 50% of their revenue is going to come from a brand new product they're launching, I'm a little hesitant to think they're going to be successful. But you typically may see like new product launches as well. So I think the analysis looks different, but I think as a venture investor, your role also looks different. Like sourcing Series B companies is very, very different from sourcing seed and pre-seed. It is a lot of tracking. It's a lot of networking with earlier stage VCs and finding ways to add value to that stage of startup founder. And I think it's a really nice spot for a strategic investor because a big value prop Intuit provides is partnership potential and opportunity. So that's been a great way to get in front of these founders and kind of explore fit, get to know them even before a funding round.
Yeah. From an investor perspective, like what are some signals that tell you a company has hit product market fit?
Usually it is scaling revenue. So if they are seeing strong growth, if they are seeing repeatable growth over the past few quarters, that is a great sign of product market fit. Or if they have a really strong pipeline and it's a vetted pipeline that we believe they're going to be able to convert, that's another indication of product market fit. Sometimes it's just getting qualitative customer feedback. And if is really, really strong positive feedback, that's another signal of product market fit. So there are a few different ways to slice and dice. And naturally, we'll rely on experts either from our business or from others we know to validate. But those are the usual signals I'll look for.
Yeah. To that point, can you share a little bit more around your typical diligence process and kind of what your team is looking at when you're assessing a deal?
Yeah. So we approach deals pretty similarly to any other venture investor. So we're digging into the product. Do we think it's defensible? What's the underlying proprietary tech? And why do we think they're going to beat out incumbents? Looking at AI products has been really interesting because there's just so much that's changing. So that's been a really unique experience. We're also evaluating, their sales efficiency and the maturity of their go-to-market motion. Series A deals are usually much more nascent in that, and Series B and C would be a little bit more established. So just again, trying to get a feel for what the pipeline looks like and do we expect the projections to hit, et cetera. We'll do a deep dive into the financials, create our own forecast, analyze unit economics. Since we tend to index on companies which have a strong SMB focus, because that's where we have a lot of customers, it's just understanding, do they have a scalable and efficient way to reach these smaller customers rather than enterprise sales, which is a huge cost to land the customer, but then you have like this big account. So we'll analyze that, and then we also pay attention to the team. I think bad vibes from the founder are always always a signal. Good vibes, always a great signal. So just what do we think of the founder? What do we think of the team they've built around themselves? I would say those are, the main areas we look as kind of a typical VC, and then we look for strategic alignment with Intuit. So what are learnings we could have from this particular investment? What partnership opportunities could be there that we could help this company with? And we'll go from there.
Yeah. Can you share maybe a more concrete example of a partnership and like how that's come to be between Intuit and one of your portfolio companies?
Yeah, of course. So we are a relatively new program, so about 2 years in. Working with those partnerships, but one, and I think you'd asked earlier about an investment. So I'll kind of share an investment that I love that I think has a great opportunity with Intuit. So I think it was earlier this year, maybe Jan/Feb, we announced an investment with Zayzoon, which is an earned wage access company provider. So earned wage access, if folks don't know, I know you know, Ruffin, is providing early access to your earned wages. So if you get paid every two weeks, but after 1 week you want access to the wages you've earned, these providers will give you like a short loan essentially that you can access for a fee, and then they will be made whole by the company or from you when you actually get paid. So there's two different models. There's a B2B model, which is paid through companies, or you can go direct to consumer. So Zayzoon goes B2B, and they have a lot of partnerships with payroll companies as well as HR providers. So they're able to actually address the SMB market very scalably. So anyways, love the team. Super efficient business, great kind of overlap potential. And I think that category is something that is so relevant to Intuit, which is customers are getting access to money that they need to like get gas and get groceries. So in line with like what we try to do, empowering consumers. And then businesses, especially SMBs who really struggle to retain employees and like there's this huge cost to hiring for them, they have better benefits to offer to employees to get them to stay longer. So I think that type of company is such a great fit for us. It's so squarely within our mission and services both, end consumers and small businesses. So it's a great example. Guys should check them out. I think great founding team and overall like fantastic team.
Amazing. And then to your point earlier of trends, you mentioned AI. Are there any like either specific things in AI you're super excited about or just any trends outside of AI that are grabbing your attention these days?
So what are trends outside AI? I don't understand. Yeah. So one of the areas I've been digging into recently is AI related. It's AI powered video editors. So there is a huge trend. I'm sure folks are all aware of just video content becoming a search functionality. So instead of Googling something, folks will just search on TikTok or Instagram to figure out what are the best places to eat, what are the best things to do. Video content and short form content in particular is just becoming such a integral part to every business's like general strategy. And so there are a number of AI tools popping up that help with this. So there's companies like one's called Munch. Another example is Opus Clip. They take long form content. So you have, an hour-long webinar, you pop it in there and their AI will analyze which are the most interesting portions of the videos. They'll cut and clip it for you instantly and you can post it to socials as short form content. So those tools have been interesting, I think, specifically from like an SMB owner's lens or like an individual creator. You're obviously saving a lot of time and manual work in terms of editing, captioning, etc. And then slightly newer, but I'm interested to see where it goes, are AI avatars. So you could actually like theoretically automate the creation of short form content using AI avatars. So you have Synthesia, HeyGen, which are doing this for enterprises, but like bringing that into video content, like personalizing videos for individual consumers. So it's like, hey, Ruffin, thanks for your purchase. Come back whenever. Or like, hi, Tanvi, like saw you were checking out our website. Like, here's a free like demo or what have you. And like, if we take that even one step further, I'm seeing AI tools that are like targeting media companies. So instead of, filming for a movie, you would just render it in AI and like that becomes your whole movie process. So Lots of directions you could take, AI driven video tools, but that's an area I've been kicking around and trying to think through what is relevant to, businesses and SMBs and things like that.
Going to be a wild next few years to see everything that kind of comes out. Lots
Indeed, it
of really
is.
interesting things happening. For this season of the podcast, I'm asking all investors to choose either a VC concept or startup concept that they would like to break down and explain it for us. So I'll let you take your pick.
Yes. Okay. So I am going to talk through financing docs for this section. And bear with me because it's a bit of a mouthful. So basically, and the reason I want to pick this is when you're a newer investor, I'm thinking selfishly from my lens, like I did not know what these were. No one ever explains to you what are legal docs. No one teaches you how to read them or what information is in there, but they are really, really, really important. Like it's all fun and dandy when you get in on the round and you're wiring the money, but when things go bad, when anything happens, like these are the binding docs that dictate, how your money works. So they're really, really important. So in general, there are about 5 or 6 docs you will get as a part of like your closing packet with your legal team. And so I'll run through them and kind of share at a high level what each of them are. So number one, you'll have your term sheet, which is issued by the lead investor or co-leads. And this will outline the financing terms for the round. So what's the valuation, the pre-money, post-money, what's the round size, who are the other investors, etc. The next item is the stock purchase agreement. This doc shares how many stocks are going to be issued as a part of this round, which investors are purchasing which amount of stock, and what is the price with which you're purchasing each of these stock amounts. And this doc is really, really important when you're doing any type of cap table modeling, as well as if you're trying to see which safes are going to convert and how's that going to impact the dilution. And then it also shows you which of the existing investors may be taking advantage of their pro rata and buying more shares as a part of the round. So stock purchase agreement, important doc. The next doc is the investor's rights agreement, also a very, very important doc. It's going to define as an investor, what are the rights you have? And those rights include information rights, receiving updates on the business, key financials, product launches, hires, things like that. Inspection rights, so the right to look at their books, understand the actual finances and statements of the company, as well as preemptive rights, which are pro rata rights to purchase further stock issuances. And the other important thing that's laid out in the investor rights agreement is what qualifies as a major investor. So that'll typically be a percentage or a number of shares you have to own. And this is important because usually all of these rights are tied to your major investor status. So for a CVC like Intuit, we're a publicly traded company. So we have to have access to your financials for our accounting needs. So typically, even if we're not a major investor, we'll issue a separate side letter, which can be done really for any investor, as long as the company and the fund are aligned, that kind of defines what our information rights are. So again, investor rights agreement, very important. Again, when things are going south and you want to know the financials, but you're not a major investor, you're going to look back at this and say, hey, I wish I'd agreed or negotiated on that a little bit differently. And then you have the certificate of incorporation. This is modified for every round, and it outlines some of the rights that comes when you're a preferred stockholder, like your liquidation preferences, voting rights, etc. The next doc is the right of first refusal and co-sale agreement. This doc provides the company the option to buy any shares that existing investors would like to sell. So they can refuse, the sale to others, and they'll purchase the sale themselves. And if they decide to not purchase the shares, then the current investor can sell their shares to anyone else. And then lastly, it's the voting agreement. So how the company is going to vote. And these votes are usually tied to the election of board of directors, as well as the sale of the company. So quick and dirty overview of round docs. I hope I got it all right. I'm still learning, but I think I just want to reiterate that, in addition to the term sheet, I think the stock purchase agreement and investor rights, those are 2 docs I've gotten very familiar with that I never knew existed before.
Thank you. That was amazing, incredibly helpful. And I feel like we could do a whole hour-long session breaking down all of the financing
Yes,
docs.
this
So
is
maybe
why you
one day.
need lawyer friends in the startup
Yes.
space.
Yes, exactly. Amazing. And then final question, can you share a female founder, investor, or leader who inspires you and a bit about why?
Yes, well, I have two because how could I
Totally,
pick just one?
totally okay with
Uh,
that.
so the first person I want to talk about is Rihanna. She is my all time goat.
Amazing.
I often say if I could be anyone in the world, I would pick Rihanna. And it's not just that she's like an amazing, musician, artist. I think I really take inspiration from what she's done with Fenty and her, Savage lingerie brand because she really put underserved consumers at the focal point of both of these products, right? With Fenty, it was different complexions to cater to women of color. With her lingerie brand, it is just different body types, different sizes, and just obviously she's hugely famous, so I'm sure that contributes to the success of both of these companies. But I think the success is also rooted in just like providing a better product, like grounded in what consumers need and grounded in what underserved consumers need. So that has always been my primary reason I love her. And then performed pregnant at the Super Bowl, like did a cover of Vogue while pregnant. I mean, just redefining all of these things about what it means to be a woman and like being stylish and incredible and powerful in your pregnancy rather than just kind of like hiding away and not doing the things you typically do when you're pregnant, which I feel is this expectation that's there on women. So love Rihanna, really excited for her new path and hope eventually one day we'll see a new album, but we don't know. We'll see. One day. And the second woman, I mean, I would be remiss if I didn't talk about Kamala Harris, given she has announced her bid for presidency and is hopefully the Democrat nominee. Um, yeah, I think just in the venture space, I'm sure you and everyone else saw the endorsement for Trump from Mark Andreessen and Ben Horowitz, and I think it's just such a defeating and demotivating experience to see the two of them endorse Trump. And I actually listened to their podcast where they talked about why they endorsed Trump, and it was interesting. I agreed with some of their points. I think some nuance was missing, but it really just got me thinking when I saw Kamala's nomination or Kamala's intent to run, of like, hey, I actually think she's going to be amazing for startups and for entrepreneurship. I think number one, seeing a woman of color, seeing a Black woman, a South Asian woman in a position of power like that is going to inspire so many people to say, hey, she looks like me, like I can do this. She has, and I'm, still learning about her platform, but I think is focused on middle class Americans, focused on Black entrepreneurship. So when I think about what could be great for my life and my world, in addition to what could be great for startups, I'm really excited for what she represents and like the change that could come with someone like her. So excited for that, and looking forward to all things coconuts.
Literally, those memes are getting wild on the internet. I'm loving them, bringing a lot of joy to my day. And wouldn't it be amazing if we had a woman of color in power and just a woman to begin with, which is just crazy that we have not done that in this day and age. So thank you so much for both shout outs. And then finally, where can everyone find you and where can they learn more about VC Unleashed and Intuit Ventures?
Of course. Well, LinkedIn or Twitter are probably the best areas to reach me. I also have a Medium where I wrote a 3-part series on breaking into venture capital. So check it out if you're trying to break in. It was 18 pages, which is why it's in 3 parts.
Wow,
So I have a
incredible.
lot of detail in there. And yeah, feel free to reach out to me on LinkedIn or on Twitter. I would be happy to chat or just kind of, connect offline.
Amazing. Well, I'm always looking for more resources to direct people looking to break into VC. So that is going to be added to my list. So glad I know about that now.
Yes, yes. And for VC Unleashed, we're vcunleashed.xyz. Check us out online and you can fill out a form to join our community. We'd love to have you.
Amazing. Awesome. Well, this has been so much fun. Thank you so much for joining the show.
Yeah, thanks so much for having me, Ruffin. Good to be on.